What's up, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tsla, Nvda, the QQQ, and a couple of other tickers. I'm also going to break down what's happening with the economic calendar moving forward, talk about big factors involving CPI and what you should be watching for as time goes on. But just note that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. You deposit $100, you're guaranteed 5 free stocks. Deposit $1,000, you're guaranteed 15 in total, and you're also guaranteed an 8.1% APY on uninvested cash. So friends, very soon in just about a couple of weeks. Anyways, for the market, I just want to mention that right now we saw a very, very nice push approaching the close for today in anticipation of CPI for tomorrow. And this is exactly what I predicted would end up happening. I said that in my video yesterday, the market would likely try to push approaching CPI, and that's what happened so far. But the question is, will we continue this pump tomorrow, or are we about to get a rug pull? I'll give you guys some insights about what CPI could look like and how this could affect all these different charts. So the first thing to remember is that tomorrow is going to be Wednesday, September 11th, 2024. 1 hour before the market ends up opening, we have CPI data coming out. And this is going to be very important. It's going to affect the Fed's policies, how the market views the current circumstances, and a bunch of different factors like that. So the first thing I was mentioning is that when it comes to CPI, core CPI month over month is expected to be around 0.2%. That's what the forecasted consensus happened to be. And that's very close to what we saw previously, so it makes a lot of sense. And that's very, very probable that it's going to be aligned with expectations. Core CPI year over year is expected to be around 3.2%, which is what we got last time. That's most likely going to be fine. And then CPI for all items month over month is expected to be around 0.2%, the same as what we got last time. So that's expected to be the same. That should be fine as well. But the only thing that I think is a little bit trickier to determine would be what's happening with the year over year CPI. I don't know about this one, guys. The last time it was 2.9%, but we're expecting it to be between 2.6 and 2.7%. I don't know about that, if it's going to be aligned with expectations or not. We'll have to wait and see. But for now, I can tell you that there's a good chance the overall numbers will be decent. I say that because when you look at all the data, okay, the last CPI report was once again aligned with expectations, and there's been a big downtrend on core and all items CPI according to this data. Now, once again, I know the data is not 100% accurate. We can't trust everything that's said by the Fed and etc. I know that, guys, but I'm just trying to go about this data because this is what the market uses. So for now, the data is still trending in the direction that the CPI report will be decent. Now, one thing that you also have to remember is that CPI is also heavily dictated by the previous month. So, for example, we got a decrease in April, right, compared to March, and then we got a decrease in May compared to that of April. And we've been on a downtrend, so it's going to likely continue this trend, in my opinion. When you look at other pieces of data like this, you guys can see on the month over month basis, it's still been pretty decent in a very, very similar trend. Now, there's something else that's very important you want to be paying attention to, and that is CPI versus crude futures. When you look at this, right, crude has a tendency of leading CPI for all items. And you guys can see how they have very, very similar trends where they drop together, they pump together, they come down together, they're back up together, back and down. It's absolutely wild. So we have the data for crude for August already, and CPI is yet to come out tomorrow. So this could give us some hints. So in July, okay, CPI was at 2.92%. This is once again for all items year over year. And then crude futures was at 80. Okay. Now for August, crude futures is at 75. So crude futures went down, and we're yet to see what's going to happen to CPI. Because crude futures went down, we're most likely going to see CPI go down. So most likely CPI is going to be decent. Will it be decent enough to be aligned with expectations for all items? That I'm still not sure about, but everything else should be fine on the month over month and year over year basis for core, and also month over month for all items. So everything should be fine except for year over year for all items. I'm not too sure about that, though. That's the only thing I'm still a little bit more concerned about. The report is very important because it's going to give us more insights about what the Fed is thinking. If we get a really good CPI, we could see this bar start to go up like crazy, and then this one could start dropping. That would suggest that the market's anticipating the Fed to be even more dovish. We'll see. Right now, the market thinks there's a 69% chance we get a 25 basis point cut, and about a 31% chance we get a 50 basis point cut. So we'll see how it goes for the next week meeting. That's going to be very, very important for the markets as well. CPI will affect this to a large extent. So once again, if we get a good CPI, a really, really low one, this is going to start going up, right? The market's going to pump. This will go up, and this will go down. If CPI is so, this might stay the same. And if we get a hot CPI, this one is going to start going up, and this one's going to go down. So we'll see. We just have to wait and see. Most likely, we're going to get a decent CPI in my opinion, so we'll just be patient. Last thing I just want to go over before I talk about the charts is this data. Right now, the market still has fear dictating sentiment. We're getting closer to neutral as the market's attempting to rebound. Momentum is trying to bounce off the previous supports, hitting this 5,500 area on the S&P 500. We're going to be watching to see if we get a bounce. On top of this, we have the puts and call option ratio. This is continuing to go up. So this is showing us over the last couple of days, as the market's been pumping, people are loading into shorts. We're seeing a lot more shorts kind of like coming out. And we'll see if this leads to a big shift, because for the last 5-day average, there's a little bit more shorting going on. Will excuse me, will that cause market makers to squeeze shorts, or will we see the exact opposite? We'll just have to wait and see. The VIX is dipping, looking a little bit more bearish. That's a good sign for the market. So we'll see how things end up going. With that being said, that's it for my data. Let's now just focus on the charts. So it's very simple. CPI is going to be expecting a big move for the markets. So I think it's very simple. If we get a decent CPI and the market pumps, SPY will hit 550. If 550 breaks, we're looking for a test of 553. That's the previous resistance right over here. And if 553 breaks, we're going all the way up to 556. Okay, those are going to be your very, very bullish targets. Make sure you watch those levels carefully. If 550 breaks, we're looking for 553, then 556. Now, if the opposite happens, let's just say CPI causes a dump, okay, we're looking for 547, 545, then potentially 543 is our supports. If 543 fails us, we have this last support at 542. Then if that fails, we're going to be coming down to fill the gap. Okay, so those are your bullish and bearish targets. What do I think is going to happen? I think that we're going to actually pump a little bit higher looking at how bullish we look. And the fact that most of the data suggests that CPI is going to be decent. And the fact that every CPI we got for the last few months was decent. Once again, fueling the market to go higher. And that's what's been leading the Fed to becoming a lot more confident in their cut thesis for the month of September. So I think we're going to most likely start off with a pump tomorrow, whether we gap up to about 550 or even 553. But I'm not confident the move is going to last. We could pump a little bit higher, whether we go to 550, 553, even 556. But off one of these levels, SPY could form a top and then get a big rejection and start dipping again once we price in CPI. That's my warning for everyone. The market is still, so the market's been on a downtrend overall, right? We were still technically not at all-time highs. We're still below these highs right here. We haven't even broken past 552. This could just be a rebound attempt for another continuation lower. So you want to be very careful. Don't be overly bullish or overly bearish. I think we will pump higher temporarily, but I don't know if the move will last. I don't think it'll last forever. And I think that we could be establishing a top very soon for another rug pull. So I just want to give you guys a warning about that. For now, don't worry about the rug pull. For now, I think the market will pump higher and we'll see where we end up topping. So I want to give you guys a heads up about that. That's what my view is for now. For Nvda, okay, we have a nice inverse head and shoulders like structure. If we are bullish, we're going to be looking for this 110 areas resistance. If that breaks, we're going up to about 112 and 115. If we're bearish, you want to lose 104. If that breaks, we're going to be dumping down to 100 flat. Technically speaking, this looks more bullish. It looks like it wants to be pushing for the 110s and then 112 plus. But I don't know for sure. It depends on CPI. And even if Nvidia does push a little bit higher to get to like 112 or wherever our target is, we're still technically not at all-time highs, and we could still be on a downtrend. We could push higher then end up dumping lower. That's always a possibility that you want to be open-minded for. All right. For others out there like Bitcoin, if Bitcoin's bullish after CPI, we're going to be heading for 59,000 plus, if not 60,000. If we're bearish, we want to lose 56,464. If that fails us, we're dipping all the way down towards 55,000. I think the 4-hour in Bitcoin is looking more bullish and we're favoring upside. So it is favoring us going up to about 59,000 to test our 200 EMA, if not 60,000. But just to be safe, we'll watch and see which way we break. So this looks more bullish to me. I favor the upside for Bitcoin, but then we'll see what the reaction happens to be depending on CPI. Will we pump and dump or will we see something else? For ES, for futures out there, ES looks bullish. We're looking for a test of 55.13 tomorrow. That's going to be our 15 and 20 EMAs. If that breaks, we're going all the way up to about 55.66. That's going to be our next target. That's also previous support becoming resistance. Now, if we end up failing to break those resistance levels, especially this 55.60 area, if we don't break that, we could still, pump and then reject later on to fill this gap down below. So don't forget about the gaps down below. There's also another one way down here. So this could just be a temporary relief rally before we continue lower later on. That's how this might end up looking. Okay, so I just wanted to give you guys a heads up about that. The pump could be temporary, not necessarily forever. Tesla looks really nice right now. We got a very, very nice rally that started. I was saying since the morning it was looking bullish to me. If we lose 225, we're looking for 222, then eventually 220 all over again. And if 220 fails this, we're going to be looking for a dump to about 217. If we're bullish and we manage to break past the top or the high of the day, we're looking for basically 228, and eventually the 230 area above that, followed by 234. I presume the most likely possibility is that we're going to continue this uptrend. Tesla will likely try to push a little bit higher up to our resistance towards 228 to 230, but then we'll see if Tesla could break that or not. It is possibly pump a little bit, get into the low 230s, then eventually make our way back down as we still have these gaps to fill below, not to mention the fact that when you really zoom out of Tesla, this could be fighting some tough resistance right here. We might not be ready for this big breakout yet, especially because of the gaps below. So we'll see if this is a trap, if Tesla could last in the 230s or not. We might get close to 230, maybe break temporarily, then end up dipping. So watch and see. For NQ, if we lose 18,768, we'll be dipping all the way down to about 18,600. And if we manage to break past 18,900, we're looking for basically just under 19,000. So with this nice looking accumulation structure and the fact that we made a higher low, NQ is looking bullish and it may get very close to 19,000. Whether or not this breaks depends on many different factors, so we'll see how things end up developing, and we're going to be very, very patient nonetheless. My favorite upside a little bit more for NQ, and then we'll see if we end up getting rejection. For now, we do look bullish, and we'll see what happens with CPI. For the QQQ, if we end up losing 457, I'm going to be looking for a dip all the way down to about 453. So I think we could be looking for a big rug pull if CPI is not good. And if we're bullish, we want to break past 460. If that breaks, we're going all the way up to at least 465. Now, technically speaking, I favor that this is going to be looking for 460 and eventually 463 and 465 for a little bit more upside, but then we'll see if we establish a lower high and get a big rejection, because this could still be a downtrend, right? Right, we had this pump to all-time highs. We came down, made a lower high, came down. We could be making a lower high again before we continue lower. So don't turn way too bullish just yet. I think we may pump temporarily, but we will see if the move ends up lasting or not. For Apple, to me, it just looks like we're completely range bound. We're stuck within this range between these key levels. So we're going to be watching to see this 217 area as our support, not to mention the resistance all the way up around 220, basically 221 to 223. So every time we hit 217, Apple bounces. Every time we hit 222 to 223, we kind of reject. So we're just stuck within a range. It's been like this for the last couple of weeks. Ever since September started, it's been like this. So I presume we're going to continue like this unless we get a big move. If CPI really pushes the markets, we could try to break past 224 to turn bullish. If we lose 217, we're looking for 215 or lower to turn bearish. There's no direction right now that's more imminent. We just have to wait and see which way it breaks. So I'm going to give this some time just to be safe. For others out there, we have Palantir. Palantir is kind of shuffling up here. We're looking at 35 as resistance. I called out 35 and I said that this might be a tough level and watch to see if you break. And then our support's at 33.5. We're just going back and forth and back and forth. So I think we're going to continue to consolidate. And then if we break 35 tomorrow off a good CPI, we're looking for 37. If we lose 33.5, we're going back down to 32.5. So I'll be watching to see how it goes. There was a lot of momentum, but momentum is slowing down after such a big move after the announcement of them being announced on the and listed on the S&P 500. So we'll see. For Supermicro, we're looking at basically 415. If that breaks, we're looking for 428, then eventually the gap fill for 440. And if we lose 400, we're looking for a dip back down to 380. With this nice accumulation, we could try to push a little bit higher for that 430 target. Overall, we're doing a good job, so give this the time it needs. For Rivian, we are still trading within a range, going back and forth and back and forth. We're looking at resistance around this 13.5 area, and we have this main support around this 12.8 area. I said yesterday we might be dipping to 12.8. That's where we went to, only to get bought back up. So overall, there's a bit of a downtrend on Rivian. I think this may perpetuate, at least for the time being. So I'll be watching to see how this goes. For now, we're looking at this bearish trend. We could dip a little bit and then continue to ride this trend lower and remain bearish. To turn bullish, we want to break 13.5. Otherwise, we just remain bearish on the downtrend. For SoFi, we're just flat right now. We're looking at this support. We we have 7 as our main support and resistance at 7.2. If we lose 7, we're looking for a dip to 6.8 around this area down here. If we end up breaking and getting back above 7.2, we could be looking for a bounce for 7.33. In my opinion, I think that we are looking like we want to rebound for 7.2. We'll see if CPI helps or not. It's going to be affecting interest rates, which is very important for these banks. So we'll see how it goes. For the IWM, we're on a bit of a downtrend right now. We have this resistance to watch for at this 210 area. We have this main support around 206. We could try to push for 210. We'll see if you reject or not. But if anything, I'm going to be very, very patient nonetheless. So give this the time it needs. There's a bit of a downtrend over here that's being established. We could establish a lower high and continue to dip, but I think there might be a little rebound coming if we hold above 208. So it all depends on the levels on this one. If CPI is decent, we could be looking for a pushback up to 210, if not 212. If we end up losing 208, we're looking for 206 again. This might try to rebound for 212 depending on CPI, but then we'll see if the move lasts. On AMD, I said this might try to rebound a bit, especially as we were trying to break this resistance right over here. And I was saying that if we get back above 140, we're looking for 142. That is what happens so far. So if we get a good CPI and this continues to pump, we could be going all the way up to about 146. And then if we end up losing 142, we're going to be looking for 139 as support, followed by 136. This looks more bullish, so it favors upside. So we'll see how things end up going. So be very patient nonetheless. We'll see how it ends up developing. For ARM, we're also kind of stuck within a range. If we manage to break and hold above 128, we're looking for a push for 130 plus. And if we end up losing 124, we're going to be dipping all the way down to about 119. Now, with the 4-hour looking pretty good right here, I think that we could be looking for a push to resistance. We are showing some life after bullish news came out, but we're going to be watching to see if we can try to get back above, the resistance right over here around this 128 area. That's going to be a tough zone. If this breaks, we're going up to the imbalance towards 130. So it looks a little bit more bullish, but just to be safe, we'll wait on CPI. Coinbase has 160's resistance. If that breaks, we're going up to about 165. If we reject off support, we end up losing 155. We're looking for a dip back down to at least 151. This is favoring upside for 160 plus, but we'll see if CPI helps or not. Amazon's looking a little bit more bullish. We're looking at 180 as resistance. If we break this, this could be a nice double bottom accumulation structure, taking us up to at least 182. So if 180 breaks, we're looking for 182 on Amazon. If we don't break past this, we could be dipping back down. I presume it's going to be pushing a little bit higher as the most likely case, and we'll see if you reject later on. So be patient with that. For Meta, unfortunately, we're just completely range bound. It's not looking strong or too weak. If we could crack past $512 a share, we're going to be going up to 520. If we lose 500, we're going to be dipping. We're just continuing to consolidate. So it's not really doing much. There's not much of a direction quite yet. For Microsoft, we look a little bit more bullish. If we break past 416, we're looking for 420. And if we lose 410, we're going to be dipping back down. For Google, so Microsoft is going to most likely push higher, by the way, to get closer to about 416, if not a little bit higher. But then we'll see if we reject over time, by the way. For Google, we look more bullish. If we could hold above 150, I think 154 is coming. If we don't hold 150, we could be dipping back down to 148. Otherwise, we're just range bound. I see potential for us to push into the 150s, so give it some time. For others out there like DJT, this is trying to uptrend for now. We're going to be looking at resistance at 19.62. And if we lose support at 18.44, we start dipping down to fill this gap. This looks a little bit more bullish, especially with the debates today. So we'll see if this pushes higher. The VIX is starting to dip right now. It could continue to fall. If we lose 18.9, we're going to be dumping all the way down to 17.5. For others out there, like the 10-year treasury yield, we're dipping. This is continuing to fall. We'll see how CPI affects this. And then for the dollar index, we have a nice accumulation right over here. We'll see how things develop. We could be trying to push for this 101.8 targets, but then there's resistance just under 102. So every time we hit 102 or so, we're kind of like rejecting for the last couple of weeks. So we'll see if the dollar pumps and then rejects. If it does so, that could fuel some more upside. So I think that the market could go either way depending on CPI, but the technicals are suggesting we want to go higher, and that looks a little bit more favorable looking at previous CPI data and what futures and other things are suggesting. So most likely the market will pump a little bit more, but don't turn too bullish. When SPY hits particular levels, when Tesla hits like the low 230s, if we do pump up to there, and if SPY hits like, for example, the 550 area, 553 around that range, we could be forming a top to reject, maybe as high as like 556. We could pump temporarily, but then there could be a rejection coming because there's no sign that the market's officially bullish. the market could still be on a much larger downtrend, even if we do get a temporary relief rally. Okay, so I hope that's as clear as possible. I am not saying I'm super bullish, super bearish. I'm just watching the charts, watching the trends, and being very, very unbiased. The charts favor upside temporarily, but there's no guarantee the move will last. So make sure you guys keep that in the back of your guys' minds. I thank you all so much for listening. I'll see you guys tomorrow to report how CPI is looking. Until then, have a great day and peace out.